Hello guys, good morning and welcome to the show. Today is Friday, December 14th, 2018. And you know what? It looks like the merger between Deutsche Bank and Commerzbank is going to become a reality. Let's get the charts open right here and take a look at what's going on. The first thing is Deutsche Bank and Commerzbank, these two big banks in Germany, are basically, Commerzbank's not going down quite as hard as Deutsche Bank, but they've both been going down. They're both failing institutions. They're both huge. And the answer to all of this by the German government is, this is an absolute move of desperation right here. Them trying to merge these two failing institutions. Absolute desperation. Absolute trying to buy time. See a lot of big players behind this. Here's Mario Draghi right here. And there's just so many problems in trying to merge these, try to smoosh two banks together. Now, I thought that they were trying to get a backdoor bailout, trying to sneak a bailout into these two banks, but it's not quite that simple. They merge these two banks together, and if they start trying to do a bailout's a different subject altogether. So basically what they're doing at this point is just merging two failing institutions together. They're just going to go down quicker. I mean, this is just an act of complete desperation. And maybe it'll buy a little bit of time, but, I mean, it's going to make the problem twice as big what are they going to even call this new bank? Deutsche Commerce or Commerce Deutsche or I don't know. I mean, it's just ridiculous. Or maybe they're just going to keep the same name for both banks. I went through this article, and he discusses a lot of these key issues and stuff with merging these banks, but obviously it's going to be a huge problem. He says the merger has to happen. It needs to happen quickly here. It says the word has got out that the longer the two struggling banks remain as single entities, their depressed share price valuations will make them look even more like a shop-worn stock. The key issue with these banks will be, is there a forward-looking vision? Forward-looking vision for what? They've tried moving forward with these things, and all they're getting is garbage. The whole thing is a crazy idea. It's an idea that comes out of desperation. That's what I see. Anyway, let's get on and let's move on and take a look at cryptocurrency right now. Cryptocurrency, you know, is put in a hugely bearish signal to me this morning. That's what I see. I see a bear signal right here. This little foot right here on the end, this little foot right here, right? To me, that's really, really bearish. That's a bearish signal to me. It's trying to stabilize its price at a new lower price. It's trying to find a floor. And it doesn't seem to me that there is a floor right there just yet, and that's just bearish. Let's take a look at cryptocurrency market capitalizations today, and you know what we're seeing here? We are seeing $104 billion market cap, 55.1% Bitcoin dominance. All the coins are in the red, and I did a show yesterday about Bitcoin Cash on my other channel. I said, if you've got some in your wallets, you're probably smart if you go out and exchange it from some other coin. Well, it's fell off 13% just in one day. It was up around $100. Now it's 84 bucks. So I think they're going to go down to $6. That's what I think. And I think I don't think the coin's going to die. I just think it's going to go down to like $6. And so that's my take on it. Anyway, Bitcoin SV is also off at 11%. I went to their website to get this big thing about Satoshi's vision. As soon as I saw that, I said, oh crap, look at that. Well, the reason why is because Satoshi never existed. How can somebody who never existed have a vision? I mean, give me a break, you know? Okay, let's get back to the silver price now. And here we go. We're looking at a massive drop in the silver price this morning. It's down 21 cents even now. It's even though it's bounced back a little bit. It's at 14.50 right now. That did not look good. I did not like seeing that, waking up to see that. Let's take a look at gold. This morning, I'm going to tell you, here's the gold price, $12.34, $7.30. And I do not like to see these prices sliding this morning. All morning they've been sliding, and I mean it's had a little bounce now, and it's not sliding anymore. Thank goodness. Gold price $12.34. Okay, so now let's move on and let's take a look at the Dow Jones today. Everything's bearish right now. Well, you know, it's a no-brainer. Why? Because the Fed is actually drawing liquidity out of everything. They're sucking everything dry. So if you've got a pond and some guy puts a hose in there and starts up the pump, and he starts pumping out 1,000 gallons a minute or whatever out of the pond, you're going to see the pond water level go down. Well, that's the money. The Fed's got the hose in right now, and they're sucking out $50 billion a month out of the economy. You're going to start to see everything go down. All these bubbles start to break, pop, whatever. Okay, so let's take a look at the stock, the oil price today, and we're seeing a drop off of 54 cents, 1.1% basically, 52.04 for sweet light crude oil. You know what? I'm going to tell you what about oil. This oil price is only where it is because of United States fracking, a new technology which drives hydraulic pressure down into the old wells they used to have and gets the last little bits of oil up and out. And that's the reason why this price is so high. But, you know, fracking is a non-sustainable resource. I mean, it's going to come there. They've went through all of the best spots. They've cherry-picked all of the low-hanging fruit at this point, and they're reaping the reward of that right now. But fracking's not going to last into the future. And when that fracking's gone, you know, then the Saudis are going to have a tight grip on the oil price once again. They're not going to have to do cuts and everything to try to drop the price, and the oil market's going to become unhinged, guys. That's when we're going into the hyperinflation, you know, when the oil market's unhinged. Let me take a look now at U.S. Treasuries, and we're going to take a look at the whole yield curve right from the front to the back on U.S. Treasuries, and we see that the really tight end of the yield curve, the Treasury is rising. See it rising on the front end, and we see most of these all the way down to the 30-year. We see falling yields. I'll tell you what. The yield curve is nearly flat right now, and there's a slight inversion in the middle of the yield curve. And so, well, anyway, I don't put as much stock in this as a lot of people do, in the yield curve inversion as a sign of recession. But I'm going to tell you, you don't need many other signs. Recession's coming, and it's coming very soon. Let's take a look at the U.S. dollar index now. And what we're seeing is a rising dollar, and this is why we had the price move on gold and silver. Is this rising? Oh, how did I get on this? I didn't click on this. Let me click back button. Get back to the dollar. Yeah, there we go. Okay, so we're back on the dollar. The dollar's at 97.60. Now, you know, I've explained on my show that what makes up 60% of the U.S. dollar index is the euro. And I think a few of these problems are going to get fixed. It's been suppressing the price of the euro. The Brexit. I think it's going to get fixed. Basically, how I think the Brexit's going to get fixed is I think you're going to see that they're just going to push it off. They're just going to, as they start to get close to March 29th, the break-off date for a hard Brexit, they're just going to push the date into the future. A few months, or maybe 6 months or something. And as soon as the world sees them do that, it's like a relief rally. It's like a relief rally in the euro. Of course, you get a relief rally in the euro, you're going to get the dollar index fall back some. Now, we're also looking at Italy. Italy's going to come to a budget compromise, I'm pretty sure. That's my feeling on it anyway. I haven't checked into it today to see what the wranglings are, but the last time I checked into it, I seen them narrowing the gap to come to a compromise. And of course, we're always going to have solutions to these problems. The reason why is if they don't come up with solutions, the world is going to sink. It's as simple as that. And so when this deflation comes, which is inevitable, they're going to come up with a solution to it. They're not going to allow it to continue. So for these deflationist guys out there in the deflationist camps who are saving and putting their hoarding dollars, and they say deflation's coming and they can see it coming, and yeah, I agree, deflation's coming. But the problem is these guys are going to have to find a solution, and their solution is going to be inflationary. And so they're going to switch us from one side to the other. We're going to have deflation, and then we're going to head into the inflation. And once that inflation starts to run away and confidence starts to be lost, then we go into a hyperinflation. So that's what's in the cards. Deutsche Bank today. Okay, we're going to just talk about Deutsche Bank for a minute. Well, they think they found a solution. But that's all it's done is made this little bounce here on the end. You'd think they would get a bigger bounce, if they think they found a solution. Deutsche Bank and Commerzbank. Like I said, to me, that's just, oh my God, give me a break. If that's the only solution they got and there's going to be no bailout, batten down the hatches, guys. We'll see you in the next show.